Hello, everyone. Welcome to Options with Doug, streaming live on Monday, Wednesday, and Friday at 1:30 p.m. Eastern Time on Bookmap Discord and the Bookmap YouTube channel. Before I get started, I need to go through the disclosures. General disclosure: all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also in Bookmap Discord, there's an Options-Jug chat channel. That's a great place to post questions, comments, and content related to the topics of my presentation and the topics of the channel that I'll go through in just a moment. I'm also on X. My name there is at Doug Pless. Just a note for everyone, Bookmap is encouraging everyone to join Bookmap Discord. You do need a Bookmap subscription. There is a free subscription available if you're not already a Bookmap subscriber. You can scan this QR code for more information and to verify your account. So please join us in Discord. You can, again, verify your account for full participation in chat as well as watching the streams in Discord. All right. Here are the key tenets to my approach to trading. This is the basis of my approach to trading. I believe that options trades and market maker hedging activity are key drivers of price in many stocks and futures. Certainly, the large cap tech stocks that I follow in the trade, like the Magnificent Seven stocks, as well as the equity index futures, like the S&P 500 and the Nasdaq 100. And for the S&P 500, SPX is the underlying index. SPY is the ETF version of that index, and ES, the futures contract, is a derivative of SPX. And when traders buy and sell puts and calls in SPX and SPY, market makers take the opposite side of those trades and they hedge their delta exposure with ES futures. And for the NASDAQ 100, NDX is the underlying index. QQQ is the much more liquid ETF version of that index, and the NQ futures contract is a derivative of NDX. And when traders buy and sell puts and calls in NDX and QQQ, market makers take the opposite side of those trades and they hedge their delta exposure with NQ futures. The focus of my presentation today and the focus of the Options-Jug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading. The first is planning, and I use positional analysis. I look at how traders and market makers are positioned for the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as their directional bias. And the second step in my process is execution. I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis and for setups. And when I talk about setups today, I will be focusing on an underlying asset. Setups in that asset can be taken with futures contracts, shares of stock, or options, depending on the asset and the way you like to trade. Questions and comments are welcome. And I will be watching both the Jug chat channel as well as the chat and YouTube for your questions and comments. Please feel free to post. I'll do my best to answer your questions. And for everyone who is on YouTube, please be aware that I am on a different computer today due to Hurricane Helene, and the my screens are limited, so I will check on YouTube occasionally, but most of my attention will be focused on the chat and Discord. And hello, Stephen. Welcome. Glad you're here. And Dan, thank you very much again for your help. Dan P at Bookmap helped me to get my stream up and running again. So thank you very much, Dan. All right, here's my agenda for today. Friday, October 4th. First of all, news items, economic data, and events. To wrap up the week, big jobs report this morning, quite a reaction to the jobs report. We'll go through that in just a minute. Next, I'll go through my positional analysis. Then I'll review some setups from earlier today, and then I'll take a look at the live market. And when I get to the live market, if anyone has any stocks they want me to take a look at, please let me know, and I'll be glad to do that. All right, let's get started with economic data. I'm sure everyone has seen this. Jobs report came out at 8:30 a.m. Eastern time today. Much higher than expected. There was quite a reaction to it. So again, much greater than expected and greater than the previous numbers. All right, let's take a look at Bookmap now. We can see the reaction to that. Go to Bookmap. This is the ES futures and contract. In Bookmap, the S&P 500 futures. This is the reaction to the 8:30 a.m. data. Quick move up to around the upper daily expected move for ES. And that was also around the ES 5800 and SPY 573 level. After that touch, price started to make a series of lower highs and then drop. We'll take a closer look at that in just a couple minutes. And then the S&P 500 found support right at the SPX 5700 level, around that level. Right, so this is the S&P 500 futures. Before I take a closer look at this chart, I want to step back, take a look at a higher time frame. I'm going to take a look at the SPX. This is a 1-day, 1-year chart for SPX. This is Think or Swim. Let me point out a couple of key points here. First of all, this is the August 5th low, 51.19. Big rally, pull back to 5,400. That was the put wall at the time. Then up to new highs just above 57.50. All right, let's pick that up now with a 30-day. Whoops. Oops. Sorry about that. All right, so let's pick that up now with a 30-day 1-hour chart. Here's that August 5th low. Oh, I'm sorry. That was after the August 5th low. That's the pullback to just around 5,400. That was the SPY put wall up to new highs 57.67. And there's pretty much been a consolidation between 56.80 and right around 57.60. So consolidation range again, 56.80 to around 57.60. All right, let's take a look at the levels on this chart. Gonna have to zoom just a little bit. Actually, let me zoom in. Squeeze down the screen a little bit. All right, so let's take a look at levels on this chart. First of all, the dashed purple lines. This one may be difficult to see. The lower weekly expected move is right in line with the lower daily expected move. So we're looking at the dashed purple line just above the blue line. That is the lower weekly expected move. Here's the upper weekly expected move. This is based on the options market, based on the closing price for SPX from last Friday. SPX is right in the middle of that range. It looks like it may end the week pretty much unchanged, right in the middle of that range. So that is the weekly expected move. The dashed blue lines are showing the lower and upper daily expected move, also based on the options market, based on the closing price for SPX from yesterday. Note I do post those levels in Discord every day the evening before. Hello, Floyd's Garage. Welcome. Glad you're here. All right, so those are the expected moves. So far today, SPX trading within both of those ranges. And there was a pretty high daily expected move today due to the jobs report, plus or minus 55 points. Again, SPX trading within that range. All right, let's take a look at the spot gamma levels on this chart now. Those are the dark red lines. These are based on gamma weighted open interest. They're provided to spot gamma subscribers, available on a variety of trading platforms. Again, this is Thinkorswim 30-day 1 hour chart. I'm going to point out the key daily levels. First of all, the put wall at 5,600. This is a strike with large net negative gamma. It can be expected to act as support. That level did move up from yesterday, so it has moved up from 5,400 again yesterday, and the day before it was at 5,600. So back at 5,600. Again, that's the put wall, a strike with largest net negative gamma expected to act as support. The next level up is the volatility trigger shown with the VT there. That is spot gamma's proprietary gamma and volatility flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure. That tends to enhance or increase volatility. Above that level, like SPX is traded now, market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price to hedge their delta exposure, and that tends to subdue or decrease volatility. So very important to note that volatility trigger at 56.95 has been in play all week. Just above that is the absolute gamma strike at 5,700. That's a strike with the largest absolute positive and negative gamma. That's where most of the gamma weighted open interest is concentrated. In a positive gamma environment, that level can act as a pin. And then finally, the call wall is at 5,800. That's a strike with largest net positive gamma that can be expected to act as resistance. So the potential floor for price at 5,600 and the potential ceiling for price at 5,800. And again, the put wall did move higher up to 5,600. The absolute gamma strike did move lower from 5,750 yesterday down to 5,700 today. All right, so those are the levels in play. And again, shifts in levels, put wall higher, absolute gamma strike lower, and for SPY, the absolute gamma strike shifted higher. And finally, let's take a look at a 1 minute chart to see levels in play. This is a 1 minute chart. Oops. 1 minute chart. And again, note SPX is trading above the volatility trigger in positive gamma and also above this 5,700 level. All right, let's go take a look at Bookmap now. So in Bookmap, I have my own cloud notes. So I can show SPX levels. There's that 5,700 level that was noted as support in the Spotgamma AM Founders note, did its job, acted as support. Also have SPY levels on this chart. There's the SPY 570 volatility trigger level. So now S&P 500 is trading above the SPX volatility trigger as well as the SPY volatility trigger. Also have key ES levels on this chart. There was the ES upper daily expected move that did act as resistance after the bullish reaction to the jobs report. And I'll talk about setups in a few minutes. Note there's a difference in price between ES and SPX. Today it is somewhere between 50 and 51. I'm using 50. So I'm showing SPX 5700 at ES 5750. All right, let's take a look at NASDAQ now. Very similar price chart. Very bullish reaction to the 8:30 jobs report. Then a quick reversal lower. Now NASDAQ grinding higher. All right, let's take a look at the underlying index charts, then we'll get back to this chart. First of all, I want to take a look at QQQ so we can see the levels in play for QQQ. And the only spot gamma level in play for today is the 484 zero gamma level. And note around this 483 level acted as support. And let's take a look at NDX. NDX looks like it's heading back up toward the 20,000 level. That's a large gamma 2 level. And note these levels here down below. The put wall is actually moved higher than the call wall now. So the put wall at 19,750 is above the call wall at 19,725. And the volatility trigger is just below that at 720. So both NDX and QQQ are trading above their volatility triggers as well. All right, back to Bookmap. And here's that NDX 20,000 level. And actually resistance this morning was the QQQ 488 level, as well as NQ 20,250. And here's that zero gamma level, QQQ zero gamma level, and support somewhere between the QQQ 483 and NQ 20,000. And again, we'll take a look at setups in a few minutes, in just a couple of minutes. All right, so let's wrap up positional analysis by taking a look at gamma notional. This is market maker's position on the gamma curve at the beginning of the day. And I'm looking at the S&P 500 and NASDAQ. Note for SPX, just very slightly positive. And this is what Spotgamma looks at, the Spotgamma Gamma Index, and that's for SPX, indicating it's slightly negative. And note Gamma notional for SPY is quite negative at 1.3 billion negative, also negative for QQQ. And these numbers are mixed. So for SPX, NDX, QQQ, gamma notional increased a little bit from yesterday and decreased, became more negative for SPY. But again, right now, today, gamma notional is positive. And let's take a look at this trace tool from Spotgamma, this newly released trace tool. And I'm looking at gamma, and this blue area, this is local. Gamma is positive. Blue is positive. So positive gamma notional in this blue zone. So again, SPX right now trading in positive gamma. And that in positive gamma, we're looking for more mean reverting price action. Traders selling rips and buying dips in a positive gamma environment. All right, so if the S&P 500 continues to move higher, NASDAQ continues to move higher, I'm looking for these numbers to become more positive, gamma notional, uh, on Monday. All right, so my thesis for the day, based on the initial negative gamma notional for SPY especially, was looking for a little bit of higher volatility. And of course, directional bias depends entirely on the reaction to the jobs report. And again, we saw that it was initially very bullish, turned bearish, and then bullish again. One other thing I want to take a look at. Let's take a quick look at the Vanna model for SPX. What this chart is showing is market makers delta notional on the vertical axis, spot price for SPX on the horizontal axis. There are two lines on this chart. This white line shows how market makers delta notional may change with changes in price only, and the purple line shows how market makers delta notional may change with changes in price and applied volatility. And that's the curve that we want to take a look at. All right, so today, high of the day for SPX was right around 57. Oops, 57.46. And as price dropped lower, down to around 5,700, this is what this is showing. What this is showing is market makers, as price was dropping, market makers' delta notional was increasing, and they had to sell futures to hedge their delta exposure. So even in a positive gamma environment, there is some Vanna effect to price. So this works both ways. All right, so my thesis, looking for a little bit higher volatility today, especially based on the gamma notional, negative gamma notional for SPY and QQQ, and watching the reaction to the jobs report. All right, so speaking of the reaction to the jobs report, let's move on now to to execution. So everything that we've looked at so far, other than Bookmap, is based on static data. Based on static data, Spotgamma takes gamma-weighted open interest, applies their algorithms to come up with the levels, gamma notional, that we've just taken a look at. All right, so let's move on to real time, to execution now. And D&T Matter says, I don't normally watch Hero, but today, 10:30 Eastern Time, looks like it was a good confluence on the crossover. And you're showing a picture of Trace as well. So definitely, yeah, we'll take a look at that. We'll get to setups right now. All right, so thank you, D&T Matter, for posting that. All right, so again, let's move on to execution. As always, I'm going to start with the S&P 500. I'm going to take a look at what options traders are doing today. This is the Hero signal. It's available to Spotgamma subscribers. Again, starting with the S&P 500. This is the Hero chart, hedging impact real-time options. What this chart is showing is options trades and market maker hedging activity for a combined signal of SPX, SPY, XSP, and ES futures. There are two lines on this chart. The white line is the price for SPX, and the purple line is the Hero signal. A falling Hero signal indicates traders are taking negative delta options positions. They're buying puts and or selling calls. It is mostly decreasing today, but a rising Hero signal indicates traders are taking positive delta positions. They're buying calls and or selling puts. That's the first signal that we can take a look at for the S&P 500. That is the index signal. There's another signal that we can take a look at for the S&P 500. That's the equity signal. So often the index signal is a little bit more noisy. I like to look at it in the morning. I think it can provide more of a leading indicator compared to the equity signal. So what the equity signal, and this often has a stronger correlation to price after the first 30, 60 minutes in the morning. And it's often smoother like it is today, more closely correlated with price again, a little bit later on in the day. At least that's my observation. All right, so what this is showing is options trades and market maker hedging activity for all 500 stocks in the S&P 500 index. Again, the white line is price and the purple line is the Hero signal. All right, let's go to full screen now. And I'm going to shift to puts and calls. In this chart, the orange line is showing calls. A rising orange line indicates traders are buying calls. Market makers sell the calls. They have to buy stock or futures to hedge their delta exposure. And a falling blue line indicates traders are taking negative delta position. They're buying puts. And just the opposite for rising orange line, rising blue line. All right, so I'm going to shift back to the index signal now. Let's zoom in. Right, so what I'm looking at here, again, the index signal separated out puts and calls. First of all, this call peak here, initially traders were buying calls. Starting around 9:40, they started selling puts. And just before 9:45, they stopped buying calls, started selling calls. A call peak, very reliable bearish signal. And just a few minutes later, they started buying puts. That's shown by the rising of falling blue line. So starting right around 9:50, both the orange line and the blue line were moving in the same direction. That's a very powerful directional indicator. In this case, it is bearish when both the blue line and the orange line are moving the same direction. Note also the flow alert got your attention, signaling a potential shift, a mean reversion in the hero signal from bullish positive delta to negative delta. And that's exactly what happened just a couple of minutes later. We'll take a look at trace in actually, we'll take a look at trace now, and then we'll get to Bookmap. All right, so this is the trace tool. I'm going to shift to delta pressure. Let's go back in time a little bit. Go back to 10 o'clock. All right, so what this red zone, this is delta pressure. This is negative. This is selling pressure, negative pressure, delta pressure, selling pressure. Note this was pre-market SPX, and this is I guess a proxy for SPX. SPX does not trade before the cash open, but this is showing SPX moving up into this red zone of selling pressure, just like a heat map and Bookmap, and that is a good one indication, one signal to start looking for a short, and that's exactly what happened. The hero signal is also shown on this chart. That's this purple line right here. And note, right around 950, the hero signal starts to move lower. And I have the hero signal for the S&P 500 index. You have the choice of equities or the S&P 500. And note, of course, the S&P equities is not available pre-market since options on stocks don't start trading until 9:30 a.m. Eastern Time, the cash open, whereas options on SPX and ES do trade before the cash open. All right, so that is going back in time. We'll leave it right there. Now let's go to Bookmap. I'm going to zoom in. So this reversal starts to happen right around 9 a.m. ES starts to make a series of lower highs after S&P 500 moved up into that negative delta pressure zone. Then at 9:30, there was initial move higher in Hero, some aggressive buyers coming in. The volume dots in Bookmap are showing market buy minus sell. Green volume dots indicate more buyers than sellers. Magenta dots, more sellers than buyers. So right around 950 as the Hero signal started to move lower, aggressive sellers came in and price reversed lower or continued that move lower. So a variety of signals. First of all, S&P 500 moving up into that negative delta pressure selling zone. 950 hero signal turns negative, negative delta bearish. Aggressive sellers start to come in, price moves lower. And find support right around 5,700. So let's go back. Let's go back and look at trace. So again, the blue zone now, positive delta pressure. Go back to right around 1030. So note now the S&P 500 had moved down to this blue zone of buying pressure. as it approached the 5700 key gamma strike. Let's go back, take a look at Hero. So in the case of the index signal, options traders started to take their foot off the gas right around 10:30. And this is what appears to be what D&T Matter is showing in his screenshot. Again, thanks for posting that. All right, let's move on. Let's take a look at the equity signal now. Zoom in just a bit. All right, so for the equity signal, initially traders were aggressively buying calls. Very nice call peak here, right around 9:45. They started selling calls right around 9:50, started buying puts, price moved lower. And then right around 10:30, this is where the, to my eye, the equity signal becomes more of a closer indicator to price. Traders start buying calls, selling puts, price moves higher. And starts just grinding higher. Let's go back to Bookmap. Sorry about that. This mouse I'm using is very sensitive. All right, so there's the move down into that blue positive buying pressure, right around 5,700. Another test of that level. And now the S&P 500 is trying to grind higher, just barely above the SPY 570 volatility trigger. Remember, gamma notional at the beginning of the day for SPY was much more negative than SPX. Right? D&T Matter asked, was there a flow alert around 10:30 as well? Let's go check that. All right, so we're on the equity signal now. So there was a flow alert, not right around 10:30, it was earlier. And just after that, and in the S&P 500, these flow alerts can often be a mean reverting signal. Options trader take the foot off the gas. So that came in right around 10:10. Options traders take the foot off the gas. So Hero becomes neutral and then positive right around 10:30. So a pretty good flow alert. Let's check S&P 500. So there were no flow alerts for that reversal higher. So the flow alerts for the move lower came in on the S&P 500 index signal, and then for the move higher on the equity signal. All right, I'm checking for questions on YouTube. Floyd's Garage wants to take a look at Fang. All right, if I have time, I'll get to that. All right. Oh boy, is that saying SPX call wall at 5,700. Actually, the call wall is at 5,800 now, and the absolute gamma strike is at 5,700. What percentage would you give that level as a magnet today on close? All right, we'll take a look at that. Let's go back to the trace tool, go to charm, and it may be a little bit too early or too early in the day. And to look for potential pin levels at the end of the day, you want to look for these zones in between the red and blue. So I would say for potential pin levels, that may be around 57, let's see, right around 57.35. That negative gamma there, and positive gamma right around 57.60. So, oh boy. Oh, and actually, let me go back to real time. All right, so sorry about that. So again, potential pins here, here, here. Too soon to tell. So that is 57.15. That positive gamma there, negative gamma 57.35, and the potentially right around 57.50. And D&T Matter says, so 1010, around 1010 was a flow alert on S&P equities that sentiment may be shifting. Yes. So that especially for the S&P 500, the flow alerts can often signal, and they're being meant to, I think designed to uh, signal potential shifts in the hedging flow from bearish to bullish, or a positive delta to negative delta, or negative delta to positive delta. And D&T Matter also asked, do you notice those flow alerts more reliable than not? Yes, I think they are reliable. So definitely something to get your attention, and something you should pay attention to. All right, let's move on to NASDAQ. So NASDAQ, there are two signals that we can take a look at, just like the S&P 500. There's the index signal, combined signal of NDX and QQQ. Note, in the NASDAQ signal, traders have been buying puts all day long. That's shown by the falling blue line. Now they're selling calls as well. So the index signal for NASDAQ definitely bearish today. There's another signal that we can take a look at. The Mag 7 signal, different picture here today, more closely in line with price. What this hero signal is showing us options trades and market maker hedging activity for the stocks known as the Magnificent Seven: Apple, Amazon, Google, Meta, Microsoft, NVIDIA, and Tesla. Let's go to full screen. So what this is showing, we'll just stick to the full picture here today. Initially, traders were buying calls, and they were selling puts, but they started buying puts first. That was right around 940. Then right around 950, started selling calls. Blue line, orange line moving down in the same direction, price versus lower. NASDAQ, and this is price for QQQ, makes a double bottom right around 1030, reversal higher, just like the S&P 500. Traders start buying calls, selling puts, price moves higher. Let's go back to Bookmap, go to NASDAQ. Very similar picture to the ES, S&P 500. Order flow very clear here. Aggressive buyers on the way up. This is before the cash open. Aggressive sellers start to come in. Price starts grinding lower. It then drops sharply lower. As more aggressive sellers come in, price breaks below the NQ 20,000 level. That's also the NQ upper daily expected move and the NDX 20,000 level. Looks like this QQQ 484 level has been support. Later on in the day, it looks like NASDAQ may be heading back down to that level. And here's that 1030 reversal. Sellers are exhausted. Small magenta volume dots. Aggressive buyers start to come in. Now price is grinding higher. Maybe found resistance at the 486 level. All right, let's go back to Hero. Oops. All right, so the Mag 7 stocks, it looks like now that the options traders have taken the foot off the gas, started selling calls, started buying puts. Price is starting to move lower. And again, the index signal is bearish today. Traders net for the day are selling calls and buying puts. All right, let's take a quick look at some stocks. Then we'll get back to the indexes. First of all, Apple. So just after the cash open, and Apple traders started buying puts right around before 9:45, 9:42 maybe, started selling calls. Blue line, orange line moving the same direction, and price moves down. And now spending a whole lot of time right around the 225 hedge wall key gamma strike. Let's go to Bookmap, go to Apple. There's that 225 hedge wall key gamma strike. Price oscillating up and down around that level. So a nice bearish setup in Apple today. Next, let's take a look at Amazon. Let's see what options traders are doing. And just like Apple, there are a lot of aggressive sellers today. Cumulative volume delta has been falling all day, shifting from positive to negative cumulative volume delta. And again, back to Amazon, cumulative volume delta also falling all day. All right, let's see what options traders are doing in Amazon. Zoom on this just a little bit. So initially in the morning, traders were aggressively buying calls. When traders buy calls, market makers sell the calls. They have to buy stock to hedge their delta exposure. At 950, they took the foot off the gas and price started to move lower. Note also they started buying puts. So initially from 930 to 950, buying calls, took the foot off the gas. Just a few minutes later, started buying puts. Price moved lower. Back to Bookmap. So there's that initial move higher. Green volume dots, aggressive buyers starting to come in. Buyers are exhausted. Call buyers take the foot off the gas. Aggressive sellers start to come in. Price moves lower. That's Amazon. Next one is Meta. Very nice call peak pattern this morning in Meta. Let's go back to Hero, go to Meta. Kind of a rounded, big rounded pattern here in Hero. Here's that call peak pattern that happened just in the first 5 minutes. Call buyers initially quickly become call sellers. Call line moves lower. Just a couple of minutes later, they started buying puts. Price moves lower. Then right around 10:45, 11 o'clock, options traders take the foot off the gas. They shift from call sellers, put buyers to put sellers and call buyers. And price now is recovering. Back up, it looks like above the highs of the day. Yeah, definitely above the highs of the day. All right, so that's Meta. Next stock, NVIDIA. Similar pattern, though the call wall at 125. Resistance right at the cash open. Traders buying puts from the open. Right around 940, they start selling calls. Price moves lower. Then right around 1030, traders start selling puts. A couple minutes later, start buying calls. Price moves higher. Looks like trying to make its way back up to the 125 call wall. Let's go take a look at Bookmap. Go to NVIDIA. There's that 125 call wall. Looks like opening print just below that. It did act as resistance just before the cash open. Aggressive sellers all the way down as traders were selling calls, buying puts. Take the foot off the gas, become call buyers and put sellers. Now price moving higher, back above VWAP, maybe grinding up back up to the 125 call wall. Last stock, Tesla. Very good day to trade the range in Tesla from 245 to 250. If you were playing both ways in Tesla, you had a great day. 5 points down, 5 points up, 5 points down. Now making its way back up to the 250 call wall key gamma strike. Or let's see what options traders have been doing today. Go back to Hero. Go to Tesla. Here's that 250 call wall key gamma strike, acting as resistance. So initially traders were taking positive delta positions, buying calls, call sellers, put buyers, then price. They changed direction pretty quickly just after 10 o'clock. So this was the first call peak pattern before 10 a.m. Second call peak pattern. A little bit of a leading indicator here with puts. They stop selling puts, start buying puts, and just about a minute or so later, they start selling calls. And that quickly changes again. Start selling puts, buying calls, price moves higher, up and down again between 245 and 250 today, driven by options trades. So right now, it looks like Tesla may be, again, trying to grind its way back up to the 250 level. Although these lines have leveled off. Pretty much flat now. Let's zoom in on this. Yeah, pretty flat. So blue line, put line, orange line, call line, pretty flat. So not a lot of boost from the options market now. All right, let me check YouTube again. Udab asks, do you prefer to see delta pressure or gamma and trace? I look at both. I look gamma, especially pre-market, and then once trading starts, I spend more time looking at delta pressure. All right, so Floyd's Garage wants to take a look at Fang. Pretty thin options market here today. So net for the day in Fang, traders are buying puts and selling calls. D&T Matter asks, do you know if Spotgamma has a flow alert list? Yes, they do. So you can see all the alerts triggering across S&P, SB equities, NQ, Mag 7. All right, so yes. So there are two ways that you can look at these flow alerts. You can look at all flow alerts that come in, and the list is limited. So the instruments on the list will roll off pretty quickly. I don't know. There used to be a way to get a list of all the flow alerts. I don't think that's available now. Or you can look at flow alerts for the instruments in your watch list. So here's where you can change the settings. So this is instruments in my watch list. So for example, here's actually a very recent flow alert on Palantir, trading right around the 440 call wall key gamma strike. All right, let's go back to the S&P 500. And let's check trace. Go back to delta pressure. So right now the S&P 500 is in somewhat of a neutral zone. That's this, oops, this black shaded area. Not a lot. There's maybe a little bit more positive buying pressure. Again, this is like a heat map for Bookmap, maybe a little bit more in the blue zone of buying pressure. Let's go back to Hero, go back to the equity signal, go to full screen. So the equity signal may be starting to turn up again. Let's go check Bookmap, go back to the S&P 500. So it looks like ES did find support right around the SPY 570 volatility trigger. D&T Matter says, okay, thank you, bummer. The alerts drop off after like 5 or 6 alerts. Yeah, I think so too. Maybe that would be a good suggestion to send an email to Spotgamma, info@spotgamma.com, and ask for a more persistent list of the flow alerts. I think that would be great. Check NASDAQ. NASDAQ really grinding in a range. Back to the S&P 500. Just a reminder, everyone, I'm operating kind of in a, I guess, a less than optimal mode using just a laptop. Normally, trading, I have a PC, multiple screens, so I don't, when I'm trading, I don't have to jump between screen to screen as I'm doing here. Um, So I'm looking at during the day, I'm looking at Bookmap, of course. That's my main screen. Also, another screen shifting between Hero and Trace. And then a third screen would be my trading platform. So, really, to use all this information effectively, you would need two or three screens at least. All right, let me do a final check for questions. And DNT, you're uh, you're welcome. Final check for questions. WRB says, thanks, Doug. You're welcome. Tesla, another two-sided trade today. Yeah, very good trade. Hero is typically very good indicator for Tesla. Traders buying, sell, puts and calls, and that definitely moves Tesla around. All right, everyone. I want to thank you very much for watching. Thank you for your support this week. I'm so glad you're here with me watching today. Thank you very much for your questions and comments. Have a great weekend, and I will see you all on Monday. Thanks again. Bye.